Hello and welcome back, options traders. And I wanted to just talk very briefly about an important, very kind of a popular strategy among traders, and that is scaling into a position. And depending on who you talk to, there's only one way to scale in, and some people will say, well, you can scale up or down. So what does this mean? What are the differences, and do they really matter? Well, first, understand that when you hear the term scaling in, most people are going to tell you that it means buying at successively lower prices so that the average price is more favorable than the initial purchase. So for buyers, if you are taking the long position, it means that you're buying as prices fall. If you're the seller, it means that you are selling as prices rise. So that's, again, in some people's definitions, that's the only way that you scale into a position. But for this video, I'm just going to stick to the long position. So the question is, why only on the way down? Why should scaling in only be defined as buying on the way down so that your average price is more favorable than your initial position? Well, if you think about it, the order doesn't matter. If you buy shares of stock at 100 and let's say a month later buy another 100 shares at 90, that's one potential outcome. But what if you had bought the initial shares at 90 and then a month later bought them at 100? See, both of these have an average of 95 bucks. So why does it matter which one came first? And in fact, you could make a stronger argument that you're better off averaging on the way up. Because in this example, if you have an average cost of 95, would you rather have the current stock right here at 90? Or would you rather have it at 100? If I've got an average cost of 95, I'd much rather have the stock at 100. And that's a benefit that you're going to get when you average up, at least for the long positions. Again, the main thing I just wanted traders to get from this video is don't get too hung up into thinking that you have to only buy on the way down. It's going to limit your opportunities. Now, are there benefits in doing that, just buying in one direction, let's say only on the way down? Well, yeah, there is a benefit in that traders often get scared from positions that are falling. This is just a typical fear factor, and people get shaken out of positions. However, if scaling is part of your plan, well, you're more likely to remain in the position. And therefore, you're going to see falling prices will become opportunities. So once again, you say, I'm going to take several shots at buying the stock. It's currently at 100. And nobody says you have to buy in 100 share lots. Maybe you're going to buy 100 shares, but you're going to take 5 trades of 20 shares. And so if you buy shares at 100 and it falls, you buy some more at 95 and some at 90. Each of those you're seeing as an opportunity because it was part of your plan. Now, it is important that you do not exceed your risk tolerances. There's a difference between scaling in versus chasing a stock. If you're willing to put $10,000 into a position, don't buy 100 shares at 100 and then say, well, now let me buy more at 95 and more at 90 and so on, because it's becoming a better and better deal. Because what you're doing now is you're putting more and more money into a position that you never intended to do. All right, but if scaling is part of your plan, it can actually work for you whether you're averaging up or down. So the main thing that I want you to get from this video is don't worry so much about the order. Again, as long as you're not exceeding your risk tolerances, scaling up or down doesn't matter. The better thing is to ask yourself, what are the reasons that you're doing it? Is it because you still like the stock? Or is it just because you're hoping that it's going to change directions? Are these the right times that we're buying or selling? This is where we need to understand different aspects about stock price behavior and technical analysis, options pricing behavior. Those are far more critical than just worrying about the order. So remember, for those of you trading options, make sure that you are rolling your positions. If you get opportunities to buy in the way down, that might be fine in certain cases. But if you get opportunities to average up, don't be afraid to do so if they're for the right reasons and at the right times. If you'd like to learn more about the art and science of options trading, please check out the Alpha Trader course and Strategy Lab at optionsatoz.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.